So within the Bitcoin world, a lot of people think fractional reserve banking is a scam. It's the creation of it's essentially a printing of money, and it presents risk where if a bank fails or there's a run on the bank, then people can lose their deposits. But that's doesn't happen all that often. It happens, but not all that often. If you had full reserve banking, the thing I'm trying to understand, would that limit the progress of humans? In that, does fractional reserve lending allow us to essentially leverage the future? And have we as humans advanced faster and quicker because we have those facilities?
Yes. And it's the idea of where it goes back to what I said at the beginning about how credit does allow you to kind of get what you want today. You have to pay some interest and you have to do some work to pay back that credit, right? But you can get what you want today by engaging in this credit transaction. That is what fractional reserve banking is, but fractional reserve banking is a tough name because really all that it is, that's the business of banking itself. All economists, whether Austrians or neoclassical liberals or any sort of different version, Keynesian, they all will agree, if they understand what they're talking about, that you cannot have interest. Like you can't have interest income, interest payments without the fractional reserve. That's just the definition, is that you have, let's say people 100% deposited based money, and then it just stayed there. Based money stayed in the bank. You wouldn't have any lending. You wouldn't have any interest. So it has to be lent out. And it's also not true, just to go another, sort of bombastic take that a lot of people have, unfortunately, some Austrians as well, is that it's not true that the moment that I take $1 or £1 out of the bank account, take it from my bank, I deposit into another bank, that bank saves 10 cents of it, they lend out 90 cents. Then the next bank saves 9 cents of that, they lend out 81 cents of that next 90 cents. And it all of a sudden we're flipping into the sun the next day with this crazy fractional reserve stuff. The data is pretty clear that we've never had a system that has been fully reserved, 100% reserved, because it would just be a wealth storage system. It's not a capital market system. It's not a system that, to your question, that transforms other people's savings into real productive capital, whether it being, if I have a collection of pensioners have money, yeah, you want to make sure they have very safe investments, but maybe some people want to have a little bit more aggressive investments. You take that money that they saved and you put it into, a factory or, whatever. I mean, you're pushing savings from one group of people out into the market to generate more productive capital and capacity than you otherwise would have had you not engaged in the business of banking. So that's all it is. I really don't like the term fractional reserve banking because it's so loaded with quicksand, as my former co-host Fernando always used to say. It's like quicksand. I mean, everybody's just got all these things in mind. All it is banking. That is the definition of banking. Your money's not there. It's never been there. There's 10%. It'd have to be a massive vault if they were going to have hundreds and trillions of dollars of euro dollars right now there. And I know that people that are just learning this stuff, if you're kind of young, starry-eyed, if you're interested in this and thinking about that, the questions aren't to be asked what if everybody wants to make a run on the bank? It's just, how do we make the system more safe, more secure, more interesting, more effective, and more transparent? There's another thing I loved about the interview with Jeff. You asked him what would make an ideal money.
He described Bitcoin. And then he says he's not a Bitcoiner.
Yeah, he hasn't grokked it. Hasn't grokked it.
I think he's close, actually.
That's good. I hope that he is. And but that's kind of par for the course for economists. Again,
if you gave him a wallet with Bitcoin and a digital dollar, I think he would be 90% there. Maybe even 100% there. And that's his own issue with Bitcoin is its inelasticity.
Yeah. Let's hold off on that still, because but that's the main issue. That's what people need to see with Bitcoin is use it. It's so easy and whatnot. But all you're doing is you're having a more transparent system. Also, as Friedrich Hayek says, you're getting around what is unfortunately a centralized, monopolized system that for hundreds of years has led us to where we are. It's not all bad. The Federal Reserve does know what it's doing sometimes. They definitely don't know what they're doing all the times. And, we can definitely improve on it. That's the beauty of Bitcoin, is that it is a beautiful base money I didn't think I quite tied up your question, Danny, from before about, as Jeff was saying, like, is the Eurodollar more, and by the way, I always say fiduciary media. Is fiduciary media more important, less important? How does it relate to Bitcoin? How does it relate to the monetary base? They're absolutely two different things, but they've always existed. As I've said, as long as you've had money, you've had base money, which is like commodity money, and you've had this other thing, which is credit-based. Absolutely, it's all fiduciary media is credit-based, but not all credit is fiduciary media. So you can have mortgage loans, you can have whatever, and those things don't trade like money at all. They're not money at all. Money is a generally accepted medium of exchange. So again, who's to say that we might not have some other, like, I'm not saying this at all, but like we might not have some gift card-based thing that works on top of Bitcoin that scales, alongside Lightning or whatever. I mean, you have Liquid, you have Lightning, you have all these different things. There's all these different ways. So Lightning, by the way, is not fiduciary media. We should talk about this, about the distinction of what Lightning is. But as far as, let's make it easy on ourselves. And this, again, drives home the point of what is base money and what is fiduciary media. Exchanges. Right? Exchanges are basically Bitcoin banks. Everybody should know that by now. I mean, if you kind of, and also everybody knows that not your keys, not your coins, right? We know that. We know that at least in the general public doesn't know that. But in Bitcoin land, we know not your keys, not your coins. Okay, so what happens, Peter, when you take your Bitcoin from whatever, your hardware wallet, let's not even worry about a node or whatever, just say you send Bitcoin, UTXOs from your hardware wallet, you send it to Kraken, or who's your sponsor?
Gemini.
Okay, so send it to Gemini, all right, and then you see later, Gemini has credited your account. That's a key word I just said there, but let's just say, forget I said the word credit. You look at your screen,
yep,
and you see however many units of Satoshis are sitting on your screen. Question: who owns the Bitcoin at that point?
Well, ownership is ownership could be litigated, whereas who has control of it is slightly different. They have control of it. But do they own it?
Yeah, it's an asset on their balance. It's not in two different places. Look, this is where Bitcoin destroys.
Is this where so with a number of those companies where people look at the terms and conditions, that if they go into administration, then the assets become your asset becomes an asset of the company.
Yeah, but that's just farther downstream of a bankruptcy process.
So why do they own it? Why do they own it?
Because it's a fiduciary system, and there's only one base money. Base money is not something that can be like counterfeited. Okay. I mean, it can be counterfeited, but we know that that's not the case. But not your keys. Remember, not your keys, not your coins. You don't hold the keys to that Bitcoin. This should explode anybody's. Like, if you still think that when you put your Federal Reserve note into a bank, it's somehow your money. It's not. The asset on Gemini's books, the moment that you deposit it into their coffers, let's say, all right, into their digital cold storage wallet, it's sitting as an asset for them, and they also have a matching liability, which is your account. That's called a claim. That's called fiduciary media. That's what it is. Notice, both are money. One is base money. The other is fiduciary media. That's the education that I'm trying to do. That's it.
So in a Bitcoin world...
But hold on, let's keep going with this one. Just say, any other questions with that one? Because you started to talk about bankruptcy. Do you want to talk about bankruptcy or how?
No. It's just that was purely related to that point.
But also, so Rothbard was a big hard money gold guy. He thought fractional reserve banking was fraudulent. Most Austrians today who don't like fractional reserve banking still thinks it causes the business cycle. I disagree. I think the central bank causes the business cycle, but they have distanced themselves from this idea that it's fraudulent because the argument's been exploded. There was this guy, Philip Bagus. He's an Austrian in Germany, I guess. I'm not sure if he's actually Austrian, but he's German, Austrian.
He was an Austrian
economist.
Yeah. He was an Austrian.
Is he Austrian?
Yeah. I don't know.
If he was an Austrian. If not, he's a German Austrian. Too much Austrianism for your listeners at this point. He made this claim a while back that the moment that we have, now forgetting Bitcoin, like we have a base money Federal Reserve note that is cash. The moment you deposit it into the bank, there is somehow this idea that dual property certificates have been created. One was the Federal Reserve note that you had, that the bank now has, but also you have a certificate on that certificate. So it's a dual property certificate. It's mind-numbingly wrong as far as accounting works, economics, sort of general moral, ethical, legal business behavior, the way fiduciary media works. There's only one base money in that transaction, and it moved. The moment you deposited it, it moved from your asset section of your balance sheet to the bank. The bank now has the asset, and now we have created a liability in this transaction. The bank has a liability to you, whereas before it was just your asset, i.e. you're also equity, because remember, assets equals debt plus equity. So it was your asset and your equity. You deposited into the bank. It became the bank's asset-based money, and the bank also now has a liability to you. And why do they do that? A couple reasons. They do that for interest, to make a spread, to invest, capital markets, but it also scales payments. That's banking. That's why fiduciary media work. That's why checks, like well beyond even banknotes, which were also great fiduciary media, just a note that the bank issued, circulate as cash, we'll collect it. If you want to take some gold, we'll give you some gold. But checks, bills of credit, this in accounting, right? Every business has this: accounts receivable, accounts payable. You have it running all the time. These are fiduciary media ledgers between you and your suppliers, and the way that you settle that is easy between a bank payment. Base money isn't even touched, and that's the majority of the economy. It is, but it doesn't mean that base money is any less important. Bitcoin is absolutely there. So again, try to drill it home, because this is crucial. This is crucial to understanding the difference between base money and fiduciary media. Is when you deposit that Bitcoin into Gemini, you know, we should all know as Bitcoiners, it's not your Bitcoin anymore. Like, it is not. It is on their balance sheet. It's their asset. And then they have the Bitcoins that you see on the screen.
Their liability.
Nobody ever says, everybody says, not your keys, not your coins. They don't say, what is it then? The thing that it is, it's a claim. It's fiduciary media. It's a new type, not a new type. It is a type of money that can trade. If Gemini wanted, if you wanted to pay someone in Bitcoin, but you didn't want to go to the hassle, let's say, of, I'm not saying it's a hassle, but let's say you didn't want to go to the hassle of pulling out your ledger or whatever, but you knew that one of your suppliers had a Gemini account. Hey, let's just settle that transaction within Gemini. That's called an on-us transaction, an on-us. Okay, so this stuff is ancient. I mean, this is what banks always do. So that's the business of banking. So banking does two things. It works the capital markets. We move capital from savers to basically, I want to say investors, because and savers also investors, but you're investing it with entrepreneurs, from savers to entrepreneurs that are investing it into the economy. It increases growth. We can have interest on these things. No problems, not illegal, immoral. It works from an accounting perspective. And what was my and? Oh, and it scales payments. That's the thing. It scales payments. That's fiduciary media. It is a form of scaling payments. That's why it exists. Both to improve the economy and draw an interest rate, but also to scale payments. So that's the same. Go back to the bit refill analogy. Sergey is using fiduciary media. They're using gift cards as a way to scale payments within Bitcoin, so people can buy real stuff. It's great. It's fine, and it's not the only way to do it. There's going to be many, many ways. So I didn't quite answer your question before about what's more important, what's not. They're entirely different and distinct. They're both money. One of them is base money. One of them is fiduciary media. They're both generally accepted medium of exchange.
There's going to be someone listening to this show who has all their Bitcoin on an exchange and all their fiat in a bank, who's just realized they've got no money.
So
they got a claim.
That's you, isn't it?
Just tell them what it is.
Is that a confession?
Tell them what it is. Call it for what it is. You have a claim. It's not a dual property certificate. It's a claim. There is this, all right, just one more thing. There is this thing called a bailment. It's it's always been the minority. That means you pay for this. That's like gold money, Peter Schiff's company. James Turk is a great guy. He's not opposed to Bitcoin like Peter Schiff. He's the founder of that company. But these are good free market people. You really worried about your gold. You want your gold to be safe and secure, audited twice. You got to pay for the big doors, all that stuff. And you don't want it to be lent out. That's not a free lunch. Like, that's not a free account. That stuff is paid. The reason it's a free account in the banking system is because they're getting interest. It's lent out. That's why you can do it. But in gold money, you got to pay a fee. You got to pay. You always got to pay for the big doors, the security, the auditing. So again, that's just kind of, that's the point I wanted to make with all this stuff is it's all a generally accepted medium of exchange. You can store it and secure it, but otherwise you're in this thing called the capital markets, the banking system. And once you're in it, you're not trading on base money anymore. You're trading on fiduciary media. And there's not a problem with that per se. But of course, as I alluded to earlier, there is a problem when you have these things called central banks, which have the legal monopolistic power of the state they're the ones that can control this thing called modern base money, which is the monetary base, which is cash and coin and reserves, the master account for each bank.